Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up for this Wednesday, the 21st of November, 2018, about 1:45 p.m. Central Standard Time. I want to wish everybody a happy Thanksgiving. I will be here on Friday. We have only a half day of trading. Remember to check with your broker and see if any of the markets are going to be open tonight in markets that you trade, because some electronic markets will be, and some will be open Friday morning as well. So you've got to pay attention to what the hours are. We have sent to our clientele, I believe, all the hours that are out there. So I hope you have it. Look in your mailbox if you don't for any reason. So let's talk about what's going on right now. We had a good rally today on light volume, though, in a number of the metal markets, as you can see. The stock market's got a bounce to it. Energy prices are up. They've given up the best part of the day's action by quite a bit. And even with that huge storm taking place on the East Coast, where the record temperatures are going to be seen for lows for Thanksgiving, you're not getting a bounce in the nat gas off of that. But in the metal markets, let's talk about this bounce and go to the charts. What we have on the weekly chart of closes is gold up for the week, so far $4.06. As long as the market stays over the 18-week moving average of closes, I say it has upside bias. Second thing, I look at the price action. So what we had today was what's called an outside day. It took out Tuesday's low, high, closed higher. It's an outside day up. My rule on an outside day up is that low should not be taken out in the next two trading sessions. If it is, I'll call it a bull trap, and I'll be looking for a possible reversal. Now, the reason that's so important is it's my swing line low, but it goes into what I call that outside day rule. When I'm looking at the market, the battleground now for 4 days has been the 18-day average of closes, and this is an attempt to get away from that to the upside. If the market takes that out, my problem, let me share that with you, is then the closest moving average, because you'd already be under the 18, is 1219. So as big as my rule is, it's not like a super trap. It would just be a bad sign. Got that? If the market can exceed now and carry this push that it's getting, 1241.80, the upper Bollinger Band, that'll probably fall a little bit, but that's the number that I'd be looking at for the next resistance point. In terms of momentum, it's up and it is not overbought. So I have the market in an uptrend, higher highs, higher lows. I am not overbought. I have upside momentum and I have upside bias because I'm over the 18-day average with a potential target that if it can follow through 1241.80. In the GLD, the ETF, the popular one for gold, you have the pattern of higher lows, higher highs. It's been crawling upward. It's stayed over the 18-day average now a couple of days here. Bias is up because of that. Momentum is up. So this market's still in good shape. If it falls back, support. First support's 115.50, which is the 18-day average, and then the 100-day at 114.86. In the gold miners, where everybody says the mining companies are all dead, the market has popped up again. Now, let's take off this. You didn't know what this was coming in. You've had a pattern, I could argue here, a high, a low, coming through that high. So I have higher highs but lower lows. The market backed off yesterday. If it rallies, where do you think the resistance is? I would say it's the combination of the 100-day average and the Bollinger Band. The market is not overbought at that point. Now the market is overbought. Any reading over, to me, 70 is overbought, and you're in the 80s. And you stalled right in that combination. So I think the pros were taking money off the table today. See if I'm right or wrong. I like what I see here. I've been telling you, I'm looking for a situation where we finally get to the point where the market goes into a down thrust on this number, which would benefit silver over gold. Also, it might mean that the base metals want to come alive. And if you look at silver, in silver you had an outside day down yesterday on Tuesday. If you take out the high of an outside day down, I look then for the closest of, and this is for a potential, doesn't mean it's going there, the 100-day average, in other words, the highest moving average above the market, or the upper Bollinger Band, whichever's closer. In this particular case, they're identical. So you took them out today. You're still right around there, the 1483.50 level, if the market can keep this momentum going. What you don't want to see, because that would give you a very, how would I say, a failure pattern, would be now getting under Tuesday's low. Barring that, you still have the pattern of a lower low and a higher high, but you've added something new to the market with the potential for this to be what I call a bear trap. In the copper market, you fell back today, challenged the 100-day average after having hit the upper Bollinger Band yesterday with an outside day down. You did close higher today. You are knocking on the door of being overbought. Any reading on these numbers, over 70 is overbought. It didn't do it. It's not going to close overbought from what I see, but the market is trying to work off having hit that upper Bollinger Band of going back to support. I still don't see a trend. And admittedly, these are still the December contracts, and that happens to be where all the trade volume is. That will change on you next week just like that. People won't want to hang on to the first notice day, so they'll move into the next contract months. In the platinum market, interesting pattern. Number one, momentum is just sideways. Number two, I can argue you got lower highs, but I can also argue you got higher lows. So I don't see anything here of interest. I would expect the battleground to be the 18-day average of closes. I think the market resolves itself to the upside if you take out 862.40 and resolves itself to the downside if you take out 845.60. So one of these ways that it breaks out here, I think, is the next move the market makes. In the palladium market, you've got higher lows, higher highs. That's bullish. But what you've got here is you've got momentum pointing down, so the market's fighting with itself right here. The 18-day average is support, but to get there means you're going to set up a pattern then of potentially lower highs, lower lows, and you might go right to that 18-day average and not have an uptrend but a downtrend that could develop. It's a dangerous pattern because you've got divergence here with momentum and the bias. In the DES dollar index, you bounced yesterday back to the 18-day average, and that's pretty much where you're at right now. You're trading at 56, 52 is the 18-day average. You've still got lower highs, lower lows. If you were to close under 96.52, that would be a new bearish signal. I don't see that happening. I see the market having gone flat at this point. I want you to check your mailboxes, your emails, obviously. I sent out to a number of you that are on my mailing list a Black Friday special if you're not a, excuse me, if you're not a subscriber to my commentary. I think you'll find it interesting. It's a one-shot deal for the Black Friday special. Hope you take advantage of it. If you want to see my research and haven't done it, well, you can get a free trial by either calling us, go to our website, you'll see a carousel of free offers, click on anything, you'll be able to fill out what you need for that, and we'll get it on the list, or you can click up here, it'll take you right there. Have a great holiday. I will see everybody Friday. You have a good day.